Bitcoin has been moving through one of the most uncertain periods the market has seen in years, and traders across the world are asking the same question: how long will this decline last, and what does it truly mean? The recent drop toward the $80,000 zone shook investor confidence, not only because of the numbers, but because of the speed and pressure behind the sell-off. Across exchanges, ETFs, whales, and retail wallets, a synchronized wave of selling has created the impression that the market is collapsing under its own weight. Yet history shows that the moment sentiment hits extreme fear is often the moment when the market is closest to finding its bottom. A key concern fueling panic right now is the potential removal of MicroStrategy from major indices such as the S&P 500 and the Nasdaq, an issue raised by MSCI. If such a removal were to happen, billions of dollars could be forced out of the stock, and because MicroStrategy is heavily tied to Bitcoin, the selling pressure could spill over into the broader crypto market. This narrative alone has amplified fear, especially after the events of October 10th, when cascading liquidations across multiple exchanges triggered one of the largest sell-offs in crypto history. Many leveraged traders were wiped out, and the market entered a self-reinforcing cycle of fear and liquidation. Despite this chaos, several indicators suggest that the market may be near a relief zone. Historically, when realized losses spike to extreme levels, meaning investors are panic selling at heavy losses, Bitcoin often finds a local bottom soon after. The same pattern appeared during the FTX crash, the COVID crash, and multiple capitulation moments across past cycles. Each time, extreme pain preceded a strong reversal. In addition, several major Bitcoin ETFs just registered their highest selling volume ever, with some even entering oversold territory for the first time. Such extreme conditions rarely persist for long. Price structure also offers clues. Previous corrections of 30 to 35% have occurred multiple times within larger bull markets, without invalidating the long-term uptrend. When observing past cycles, these deep pullbacks acted as resets that later fueled explosive rallies. The current decline mirrors those patterns almost perfectly. Support levels around $81,000 held temporarily, and if broken, deeper levels around $76,000 would come into focus. Even so, the long-term thesis pointing toward potential highs in 2026 remains intact for many analysts who believe the market is simply in a temporary downswing within a broader bullish framework. The broader environment outside of crypto is also contributing to this turbulence. Traditional markets have shown weakness, with the S&P 500 struggling to break key resistance levels. When global markets are risk-off, liquidity drains from risk assets like Bitcoin first. At the same time, algorithmic trading systems, market makers, and institutions are amplifying each move with automated selling. This creates the impression that the market is collapsing for fundamental reasons, when often it is simply reacting mechanically to volatility triggers. The MicroStrategy and MSCI situation remains one of the most important catalysts to watch. If the company were removed from major indices, it could set a precedent affecting other corporations that hold crypto in their treasuries. However, Michael Saylor has publicly stated that MicroStrategy is not a fund and maintains a legitimate software business that should qualify it to remain listed. Political factors may also come into play, considering influential figures like Donald Trump are connected to similar structures. Many believe regulators will hesitate to enforce a rule that could impact politically connected entities. Ultimately, fear dominates the market now, but crypto history is clear: the worst sentiment often appears right before momentum reverses. The sell-offs, liquidations, and panic can be painful, but they also serve as the foundation for future growth. Whether the bottom is already in or still a bit lower, the structure of this decline resembles previous moments of exhaustion rather than the beginning of a true collapse. Bitcoin's long-term narrative remains based on scarcity, institutional adoption, and macro demand cycles. When the market finds stability again, the next major leg of the cycle may begin from the very fear investors are experiencing today.